Theta is at a historical support zone it hasn't visited in years. Bitcoin just dropped from $82,000 to $61,000 in a single week. Panic selling, liquidation cascades, key supports gone, and sitting quietly underneath all of that chaos. Two charts, two decisions. Let's break both down. This video is for educational and entertainment purposes only. Nothing here is financial advice. Always do your own research before investing. Let's start with Bitcoin, because nothing in this market happens in isolation from it. This past week was one of the more aggressive sell weeks we've seen in this cycle. What started as a downtrend from the $82,000 area in mid-May accelerated sharply into early June, and what began as an orderly correction turned into something that looks much more like panic selling. Here's the sequence. The $74,000 support level broke first. Once that went, the $70,000 psychological zone couldn't hold either. And with volume rising on the way down, price dropped to the $61,000 area in a relatively short window. Rising volume on a declining price is not ambiguous, and it means sellers were in control and conviction was high. Why did this happen? A few things likely layered on top of each other. The most mechanical reason is leveraged long liquidations. The biggest drops in crypto aren't usually caused by people selling their spot holdings. They're caused by futures traders getting wiped out. When $74,000 broke, stop losses and liquidations triggered in a cascade. Each support that broke accelerated the next move lower. Beyond the mechanics, macro conditions contributed. When interest rate expectations shift or global risk appetite drops, Bitcoin is typically one of the first risk assets to get sold. That rotation out of risk and into safety creates consistent selling pressure that doesn't respect technical levels in the short term. And finally, profit-taking from the $82,000 highs. Large players who accumulated lower don't hold forever. A failed breakout attempt at $82,000 gave them the opportunity to exit, and their selling added to the pressure. So where does that leave us heading into next week? Two scenarios, and they're cleanly defined by one number, $60,000. If BTC holds above $60,000 to $61,000, that's a zone where buyers have historically shown up aggressively. A relief bounce toward $64,000 to $66,000 becomes possible, and beyond that, $69,000 to $70,000 is the range that needs to be reclaimed for bulls to argue the structure is still intact. If we get daily closes below $60,000, selling pressure continues. $58,000 and $55,000 become the next reference points, and the conversation shifts from correction to something more structurally concerning. My honest read, this is a sharp correction, not necessarily a cycle top. But bulls need $66,000 to $70,000 back before they can make that case with confidence. The weekly close is bearish. The next week's open is critical. Now, let's talk about Theta and why this specific moment on this chart is worth your attention. The setup, Theta, has been in a downtrend for approximately 8 months. That's not a short-term correction. That's an extended grinding decline that has taken price from meaningfully higher levels all the way down to where it sits today. But here's the thing, that 8-month decline has brought price directly into a major historical support zone, the 0.14 to 0.15 band. This isn't a level drawn arbitrarily. This is a zone that has been tested multiple times and has held. Every time Theta has approached this area, buyers have shown up. The market has memory, and this area is one it remembers. What makes the current setup particularly interesting is the character of the selling. As price has approached this support zone in the most recent down leg, the selling momentum has started to lose force. The drops are happening, but with less velocity than earlier in the downtrend. That's a subtle but meaningful shift. It suggests that sellers are running low on fresh supply, and that the risk-reward ratio is beginning to tilt in favor of buyers for the first time in months. If the 0.14 to 0.15 zone is defended, and the pattern continues as it has historically, the base case for recovery looks like this. First targets, $0.18, then $0.22. These are the initial resistance zones above current price, achievable in the near term if buying momentum builds. Midterm targets, $0.27, then $0.32. These levels require sustained strength and a broader crypto market recovery. But they're realistic if Theta is genuinely forming a multi-month base here. In a strong market, 40 cents to 50 cents. This is the scenario where Bitcoin reclaims its strength and high beta altcoins like Theta amplify that move. It's not guaranteed, but in prior cycles, assets at multi-year support zones in the early stages of a Bitcoin recovery have produced exactly these kinds of moves. A 50% to 100% move from current levels in that environment would not be unusual for an asset with Theta's volatility profile. That's not hype. That's just how high beta altcoins behave when the tide turns. Now the other side, and I'm going to be direct about it. If the 0.14 support zone breaks on a weekly closing basis, the picture changes meaningfully. Below 0.14, the next levels that matter are 12 cents and 10 cents. The 10-cent zone is both psychologically significant and technically the last major defense before price enters territory with very thin historical structure beneath it. A break of $0.14 on a weekly close would signal that the bear market in Theta is not yet complete, that what looked like accumulation at support was actually distribution before a final flush. In that scenario, the downside is harder to define because the chart doesn't have strong reference points below $0.10. This is the scenario nobody wants, but it's real, and it deserves to be part of your analysis before you make any decision. Based on what the chart is currently showing, I see this as approximately 65% bounce, 35% final drop. The reasons for the lean toward the bullish scenario. The support zone has worked multiple times before. Selling momentum is visibly weakening as price approaches it, and the risk-reward ratio for buyers is better here than it has been at any point in the last 8 months. The 35% bear case exists because downtrends can persist past what any technical analysis says they should. Bitcoin's weakness this week doesn't help altcoins trying to hold support. And SHIB and other alts have conditioned the market to expect disappointment at levels like these. The single most important signal to watch: weekly and monthly closes relative to $0.14. As long as Theta is closing above $0.14 on a weekly basis, the bull scenario is alive. The moment you see multiple weekly closes below that level, reassess immediately. Here's where both charts land. Bitcoin had a brutal week and is now at a decision point around $60,000 to $61,000. The structure is damaged but not definitively broken. The next week's behavior will tell us a lot. And Theta is sitting at a support zone that has defined its price action for years. This is either the beginning of a recovery or the last stop before a final capitulation. In both cases, the levels are clear. The signals to watch are defined, and the right approach is the same. Wait for confirmation. Don't force conviction where the chart hasn't given it yet. If this kind of breakdown is useful to you, subscribe and hit the bell. I cover both Bitcoin macro and individual altcoin setups like this every week without the hype. Like the video if it helped and tell me in the comments: Theta bounce or final drop? I want to hear where you stand. See you in the next one.